Hello guys, glad to have you on board again. Today, we're Monday, so we're going to do a swing update, and there is fucking finally something to talk about. Not to say I was waiting for some volatility for quite some time. So here we have it, and obviously it comes from where I was expecting it to come out. Goddamn Trump has been bullshitting as usual, and apparently the US and China deal is not heading the way everyone was expecting. So just once again, remember that, yes, we did have Fed effect. But now the Fed effect has been dampened. There's not even a chance that we're going to have a rate decrease coming along the way, and they've been really clear about that. And now we do have a fucked up deal with China. So Trump is threatening for new tariffs, and obviously everything is falling apart. So I told you, and remember that, I see all the pieces of the puzzle starting to put in place and starting to get into putting things in motion. So let's sum up all those information so that you, if it happens, you'll know why, even though the why doesn't really matter. It's just a mental projection that helps you forecasting what happens and to stick to the plan. All right? That doesn't mean it's going to happen. That just means this is what I expected to happen, and now it might be happening. So I told you that this US-China trade war was probably a long shot, that there will probably be a deal, but probably a lesser deal. So once again, don't take this as granted. All it says is you could just be another storytelling from the Trump administration, just saying, okay, you don't want to give us the best fucking deal, so we're going to threaten you with new tariffs, so the market will probably have to jitter, and then we'll have a lesser deal that they'll accept. It's better have lesser deal than no deal. So it could just be one more stupid storytelling to pull back the market and then accept a lesser deal, because all that means in here is that we're not going to have the best deal, and we can be sure about that. But I knew it. It's just I wanted to have confirmations. This is why I was trading to the downside, only because to me the risk was just what happened. Something goes wrong, the market doesn't like that, and brutally reverses. So in a technical perspective, we've got a bearish news flow, very bearish news flow, and now we've got getting out of this structure, and the way we're doing it after so much stupidness means I expect us to go at least 38% Fibonacci, so I think we're going to land up to 27 for 25 approximately. This is the area. I'm going to have an in-between risk management area out of 2814. That's the area I previously highlighted. But I think any fucking way, that's the bearish entry I've had last week. I took a very tiny position sizing because it was over weak. And I told you about that. I take the trade, but I'm going just half in because I noticed there could be some up gaps on Monday, and I don't want to have to suffer too much. So now it's been working just fine. At least I have one position that can be stopped at break-even moved, which means I'll be able to reinforce if any pullback shows up. Does that mean I need to rush onto selling this market? I don't nearly think it is, because once again, we don't know what the hell's going to happen. I'll wait for 2 days Wall Street candle close to really actually figure something out. If we get to close at the lows, means the smart money is definitely no longer buying, and I mean, they weren't buying to me anyway. So all I figured out is that there will be no major supports in prices, no more buyers. And the problem is, if people starts to sell in a context where no one's buy, then this is where the ugliness starts to get. So the problem is I don't yet know. I'll know by tomorrow, by today's candle close, and probably tomorrow's confirmation will be needed as well. So don't be too aggressive, all right? You might hear it from the tone of my voice. Oh, finally we've got something to talk about. So this is more about that. I'm not excited. All I am is just I was so fucking exhausted that I'm happy seeing freaking something moving according to the plan. Moreover, remember what we said. We said that there is a cyclical problem with the VIX and a shit ton of speculators shorting it. The expiration is on 17th, which means we still have 10 days to go before we get to close this contract, which means whoever's been short selling on this monthly expiration is just on a dead end corner. They have to get out of this because If the volatility rise, most of them are leveragedly selling, which means they have margin call operations. They need to get the fuck out. They have no other option but to buy themselves out. So, like we said, there was a dangerous pileup of short selling position on the VIX. All those guys may have to get the fuck out, which means we can have exacerbated movements in prices just because of it. Just like February 2018, it's exactly like that. Too much short seller, prices are dangerously moving up, so when they go down, we go down sharply and brutally because all those fuckers have to get out on volatility. Alright, so I don't yet know if this is the event that's going to trigger a panic selling and a short VIX and a short coverage on VIX, which means it's going to be a carnage, and we could go there straight line in just a few days because we've got the news flow, we've got the parabolic risk taking on a specific area which is highly correlated to the stock market, we have empty fucking order books, so we've got everything we need for just a 5 to 6% drop in a few days. I'm not saying it's going to happen. I'm saying if it happens, don't say we go down too fast, so I'm buying for pullbacks. We're not buying a goddamn thing. I've been clear with this. I'm not buying since we've done the bottom. I made a quick call down the bottom in here for 23% retracement, and if my memory is right, I think I've been profit took just right in here. So it is not about time to just say, okay, we'll go here, so we're going to buy the dip. No, I'm not buying any fucking dip at the moment. All I'm doing is, at least as long as the goddamn deal goes wrong and that we go back to trade war, it is not going to be pretty. As for now, Shanghai is dropping further than the SPX, but like I said, to me, in a macroeconomic perspective, if the trade war stands up, now US has way more to lose than China. China may have 15% to drop, where US might have 30 to 40% drops expected. So it is not good for Trump to go against the trade war. So the question is how the US administration will pay for this in the next forthcoming day. If Trump absolutely wants his best deal and goes down the nasty road of tariffs and stuff like that, then I think Wall Street would just have to put him out of the way. Multiple ways to do this. Just put some pressure. You just put the prices down. Trump will start panicking and eventually reverse. Trump is doing market-oriented stuff because he wants to be reelected. It's simple as that. So if Wall Street wants Trump to do something that he doesn't want to do, then Wall Street is going to push prices down and put the pressure on Trump. And then either Trump will do what it does, which means narcissist, and is going to say, okay, you know what, market, you're wrong. If you plays this game, this is where the nasty part will show up. If it decides to just switch and goes according to Wall Street's expectations, and in this context, we might have some pullbacks. My question is whether we'll manage to do this without too much volatility and just stood in here, or with some big problems, and this is in this area that we're going to have to decide whether Trump goes according to Wall Street's plans or decides to go fighting them. And if it decides to fight Wall Street, I've been clear with you since the first day, it can be done in just a quarter. If Trump's managed to fight Wall Street, it is not going to be pretty. Trump is probably going to be impeached in a quarter from now. I don't know why. I don't know what fucking case may come out of nowhere to just impeach him, but I've been clear with that. The day Trump goes against the market, if he tries to fight the market, is out, is over, and it will be fucking quick. I'm not saying it's going to happen once again. I'm just giving you perspectives. These are scenarios I've been working around. I was just waiting for early validation. What I have today doesn't nearly surprise me. Moreover, it just confirms what I was expecting. I knew this goddamn deal wasn't going right. I had those feelings. Now, these are no longer feelings. These are actual facts. But I still risk. I still feel storytelling. So I fear that there could be some storytelling in the White House right now, creating some panic sellings just to say, all right, now we do have a lesser deal, but still a deal. So don't take this as granted, but as for now, and as long as these context starts deteriorating, we definitely have bearish prices and bearish news flow as well. We've got everything we need for a bearish swing. Now, aside from this, cryptocurrencies, not much to say. What I'm going to be giving you guys is this. All right, we're in a daily chart perspective in here, and remember that we've had multiple targets. The first one was in here, and that's the one I was forecasting, just because I didn't want to take too much risk, so I took the lowest possible target to reach out to. We clearly did have a breakout in here in a 4-hour context. You can clearly see this. All right, let's just put back the visual elements. It's F6, yes. So we clearly had this, all right, trend channel, context channel, trend channel, context channel. So this is accumulation, bam, nice bullish breakout. Surprisingly, we didn't have the cross signal. Normally we should have a cross signal, but if that is not a breakout candle, I goddamn don't know what this is. So definitely a breakout happened in here. Normally we stay in until market divergence, all right? We have a pullback, back to trend channel, stuff like that. Normally this could have been final excess. The thing is that this is where I partial profit took for those same reasons. I thought the trend was over and we'll have to range for a bit. Instead of ranging, we got a more bullishness, which means my plan doesn't work. We're sure the breakout is here. But now, apparently, the divergence wasn't there. Otherwise, this would have been the final excess. So it is hard to say what we're having right now. All I can tell is that from what I can see, I think we're still waiting for the divergence, which means the divergence wasn't there. We need to wait for a divergence. Now look at the market tops. We do have a higher high in here. So we might expect a lower high with a higher high on prices. So I forecast that what is the most probable right now is to search for a goddamn divergence. So in my perspective of Bitcoins right now, I suggest those who want a short-term trades, or at least shorter than 4-hour time frames, you need to follow this plan. Wait for at least a little pullback in here. Wait for momentum to go negative on 4-hour. Try to look out for those kinds of supports. And if you want to buy it out, I think it could be setting in motion close to the previous 14.6, in which I think many guys, me included, have been profit taking, and I'll probably extend to target the next area. I'll pass on that myself because I don't really want to do this, or maybe I will. I still don't know if maybe I will, but as right now my attention goes back to the stock market. Clearly it does. But you can put this as an, or sorry, that's not what I wanted, as a support action. All right, so you can try to support this area and look out for intraday action trades in this area for those who are crypto only and want to buy some Bitcoins. I think this is where you want to look out for buying entries. Rebuying yourself in to push for the next level, which is maximum 6,400. Don't target anything higher than that. It's just we're trending, so you target areas in which prices gives us some interest, and when we get there you lock on the gains and you wait for further information. So if we were about to do this and to push to divergence in here and make two divergent top with lower values on momentum, then this is where you lock on your gain. You know the next step is a pullback, probably 23% or 38.2 Fibonacci retracements, and then we'll have the final excess, probably targeting the next level, which it could be the 23% Fibonacci retracement of the overall crashing structure. So once again, just put that in perspective. If you think Bitcoin is crazy fucking bullish, we just retraced 23 fucking %, which is no more than a typical retracement. That significantly shows us that we might have ended the crash structures, but still, there could be some bearish news flow, some black swan coming out of nowhere just to flush out one more time. But I don't think you should trade that. I think we should start trading bullish, but cautiously, and trading bullish in a context. The context is we're terminating crashes. So first of all, we target retracements. We do this safely. We don't forget to lock on the gains fastly. And we buy and hold for the rest of what we bought, which means we buy, we secure, we buy, we secure, we buy, we secure, we buy, we secure, and we accumulate a long-term buy and holding stuff. That's what I'm doing, all right? So at the moment, what I'm basically doing in cryptocurrencies is just waiting for pullbacks because I still think we're going to go a little bit higher. So I'll decide when we'll get to this area whether or not I'd like to load in some Bitcoins or not. I still think there is an alt season to come along the way. I still believe Ethereum will provide some gains, but still, I don't know when. From what I can see, I don't see this short term. I think there is going to be a deeper consolidation in here, and this could look like that in Ethereum. All right, consolidating deeper, going in there, everyone will start panicking and saying, oh no, Ethereum failed its breakout and whatever shit this is. We can go there without a goddamn problem. The thing is that if we go there, all I care is the next wave to be the kind of usual FOMO fucking trade wave in which everyone starts to load in and Ethereum could get straight to my target, or even further than that. I mean, just be honest. If we were about to do 23% Fibonacci retracement on the Bitcoins, then we could do as well on Ethereum and just target the same 23% and targeting $400 and getting into the resistant context, daily resistant context. Same thing as Bitcoins, all right? Bitcoin's daily resistant context is in here. If both of them were about to target this area in the forthcoming days and weeks, we were talking about weeks, all right? It's something that's going to take some along to get to those FOMO trade waves. But if they happen, then they should happen on major cryptocurrencies, all of them included, just in different perspective. Bitcoin will have been the fastest one on the early trades, and the late stage trades, the FOMO trades, will profit from less liquid assets like the Ethereum, for example. Right? Strong accumulation, strong volume on the bottom just suggests whenever this thing goes valid, we'll probably be able to surge and freaking fucking break through all the resistances rapidly. All right? So I think it could be just a matter of timing. Remember what I've said. If you look at ETH BTC spread charts, you can definitely see that if we were about to build a goddamn bottom in here, then all that says is that right now Ethereum may be able to catch up on its late stage trending. It's been lagging behind Bitcoin, and it could be catching up on this and starts to hugely retrace, and that's exactly what we said. If we had to retrace up to 23% Fibonacci's, all right, out of current prices, Bitcoin just is 20% away from this, all right? But Ethereum, if we're about to go 23%, we're here, and we would have to go there, which means 132%. So if the goal is to retrace 23%, what do you want to buy, Ethereum or Bitcoin? So to me, the question is really, really simply answered. There was way more potential to come along with Ethereum's if both of them were about to retrace to those levels. I'm not saying this will happen, because obviously better reward means higher risk. There is definitely higher risks than the Bitcoins goes to 23% and not the Ethereum. So don't take this as granted. It's obviously better rewards comes with higher risks. I need to just limit those risks, and I think the price to volume structure suggests I definitely want to put more risks in Ethereum, even if that means higher chances to lose. All right? I don't really think it's going to happen. Otherwise, I wouldn't be buying that shit. But I still suggest, if you're in Ethereum, it just requires a little bit more patience. It's more about psychological behaviors in here. If you think it's not going up, so it's never going to go up, so I would rather like to sell that shit before it dumps, then do it. I don't think it's what needs to be done. That's probably mostly why this thing will provide most of this gain in the late stage FOMO wave where everyone figured out that, oh my god, Ethereum was the thing actually, I should have got myself in there. That's exactly the moment I'll sell them the shit. So that's exactly how it is, all right? I'm buying the dip, I'm going to sell them the ribs. So I think Ethereum just waits for a news flow, just like most of the altcoins. It's more of a fundamental game at the moment. Some positive news coming out of there. Oh, yeah, shit, tons of money rising in there. I think Ethereum will have its moment. It's just about, I'm not anticipating this. I'm just waiting for this. That's simple as that. And risk managing in between. I don't know if some news is going to show up, and I don't know what the fuck that news could be. I don't even know if a news will show up. All I'm saying is that the price and volume structure suggests anytime we've got some good news coming out of this, we might be having some FOMO trades, and I definitely want to get in the FOMO trade. I want to get in before it does, so when it happens, I don't have to overexcite myself. I just see everyone talking about that goddamn thing, and I'm just going to sell them. That's simple as that. All right, now talking about the swing trades on forex market, because obviously when when the volatility lockdown just flushes, or could be flushing, let's be honest, it's not yet done and confirmed, but if it goes according to my plan, which means remember the cyclical activity on the VIX, if the VIX were about to go for another stupid ride on top of probably 40 to 60 area, to 30 to 40, 50 area, if we're about to go there for the cyclical behavior we've been anticipating, then oh my freaking fucking god, then we're just beginning, and that will have strong implication on forex as well, because we've been holding the forex for quite a long time. I mean, look at this. Oh my freaking goodness. If the volatility lockdown were about to just disappear, then we could have a surging euro dollar. Just, I think, a falling dollar is the question. So I'm just waiting for information. Last week didn't give us any fucking clue regarding the dollar, but still, it was absolutely meaningful. What I think is the most meaningful asset is the yen. We've got a yen that is strengthening and could be about to break this up. Alright, sorry. So we need to watch out for this. I still stick to the plan that the yen somehow could find some pullbacks in here. That doesn't necessarily mean that the dollar yen won't go down. It just means yen itself, regarding the other basket of currencies, could just lose some streak, could just lose out of its winning streak. But still, from what we can see today, it isn't. I mean, the NZD GPY has been gapping down. Same thing with the CAD yen, the USD yen gapping it down as well. So it could be a mess, kind of an adjustment in the next following days. But I think anyway, in the mid-term, mid-range, we could expect rising yen, falling like shit dollar, but still, these motions will have to take place, and they will not do it like a snap instantly. It's probably something that's going to deteriorate before accelerating. But still, remember what we said. Out of the dollar, we've been shitting it here for quite some time. So it most likely could be yen deteriorating, dollar starting to weaken, and then, bam, the dollar surges to the downside, the yen surges to the upside, and the USD GPY just falls like shit. That's exactly what I expect. So don't think that this is already over and that this is already a won battle. As you can see, we're looking out for the trend channel, which means it's a 4-hour bullish context coming along the way, and it might very well support prices, which means we could do context, all right, pull back to trend channel, context, and breakout, all right? So don't think the yen is just going to the USD yen is going to fall right now, all right? Like I said, we do have a bearish timing regarding VIX cyclicity, but still, before the actual US stock market falls like shit, we're going to require to have the entire panel to fall again. The problem is we need USD GPY to just, oh my god, fall off a cliff. But still, we had some patterns to respect. And the patterns means if we fall straight line, I wouldn't necessarily be surprised, but that requires an expected catalyst. The US-China trade war going out of control is definitely what I was expecting. So it could be the thing that just burst it all together. Or it could just be a false flag. Like I said, don't take this as granted. It could just be another fucking storytelling from the White House. So, we don't know, so we manage the goddamn risk. Every time, this is what we do in here. We're not trying to forecast the future. We're just trying to forecast a scenario that seems probable, and then we see prices confirming this scenario with technical signals. We do take the goddamn trade, manage the risk. If it goes well, then we will reinforce the position sizing. If it doesn't go well, we get the fuck out with an invalidation, partially, totally, we adjust the risk. All right. So as for now, what just came out of here is totally what I was expecting. But we do this with a gap, overweek gap. So I strongly suggest push to divergence, pull back, and then I think this is where the actual trend will set itself. So don't be too very excited right now. Might be taking a few weeks to readjust between dollar and yen before we actually trend. And when we'll trend, this is where normally we should have bullish VIX, bearish USD GPY, and I don't see a goddamn reason for the stock market not to fall like shit in the US sectors. So the things are, the pieces of the puzzle starting to set themselves in motion, but still at the moment really way too early to consider this a one battle. First of all, we need a goddamn weekly, we need the daily candle close, and we would need a weekly bearish engulfing structure as well. We have it by Monday. All right, we're already bearish weekly engulfing at the moment. The thing is that we need to stay there or even lower by fucking Friday, and that's not a one battle. I wouldn't be surprised if we were about to do something like that. I mean, Monday, Tuesday, Wednesday, Thursday, and bam, Friday we go close at the lows like that with a very nasty bearish engulfing. We could do just like that. All right, I wouldn't be surprised. I would just say, okay, that's normal. We've been bullshitting Wall Street for weeks about these these China deal. We're not going to have a deal, at least not now, or a lesser deal. So we paid for the best. Now brace yourself for the worst. That's exactly what we're going to do, as long as this storytelling doesn't show up, which means they don't trying to make people panic to just buy the dip one more time. All right, so wait for confirmations. But still, we want it to be bearish. Now you have to. If you're not bearish at the moment, there is a problem. Next thing, GBP/USD, even though it's retracing, just look at how freakingly bullish last week has been. So it's just pullbacks. I think we'll just let it go for a bit, but I still see way more bullishness in this asset than anything else. We've got straight context, pull back to trend channel as expected. This was a false breakout. I decided not to get the fuck out, and I was right. We're back into this. We reintegrated the triangle, and we're not going to trade bullish ahead of a bullish breakout. But first we need to go to context, accumulate a bit, and bam, bullish breakout will show up along the way. So you do have some plans to follow. You do want to trade some forex stuff. GBP/USD bullish definitely is something you might do, because the risk is clearly to the upside. Euro dollar, still hard to figure out this one. I still think the risk is to the upside, but still requires some further validation processes at the moment. So I would say and suggest put an alert in there. If we get to test that resistance again, this is where it starts to get interesting. But still, we're not yet there, and I tend to believe that US is doing any fucking thing they can to just play the usual game, which means when they're weak, they're trying to find someone who's even weaker than them. So I wouldn't be surprised that Trump putting a shit on China would just be the first step of Trump putting even more shit into the euro area, just to at least try to have a strong dollar that is not falling like shit. So the problem is, I think this game is dangerous, but still I'm pretty damn confident that Trump will play it anyway. So I'm not going to be too aggressive regarding euro dollar, because this is exactly where Trump will try to weaken the enemies. All right, we're no longer friends. Trump is not making friends. Trump is putting shit worldwide, and I told you that the confidence is now narrowing before it's entirely destroyed. And when the confidence will be destroyed in the financial system, oh man, this is where we're going to have nasty recession trades. Yeah, I think it's setting in motion, but all we have today is just one step ahead of this plan. Clearly not saying I know the future, just this goes according to my plan, prices and signals I need to be bearish, point. It's simple as that. Regarding the stock assets themselves, first we're going to have a look at AUDNZD. So like I said, the yen pairs, all right, and just look at that, man, NZD yen. I cannot take this kind of breakout. I'll wait for a pullback, but I'm definitely reinforcing NZD yen. CAD yen, same thing in here. I'm ready for the breakdown, but we're trading the trend channel, so I'll wait for a little bit of an accumulation before going straight ahead. But this is definitely according to my plan. Like I said, I've been trading this goddamn shit for long. I mean, I was starting to sell in here. Remember how long it took, all right? 100 days to get to trade that shit, and managing to have not that best of a short price. I mean, I could have been way better than that. All right, it is not good speculative trade. I've got an average price and not really a good one, but still, I was right. We're breaking down today, or at least close to, so whether you liked it or not, I was goddamn right. I just managed my goddamn risk, and it was tough to do it because of the invisible hand in Wall Street has been doing any fucking thing they could to just manage the yen under pressure. And now I think it's about to just burst between right in their hands. They've been trying to manipulate the market pretty nastily actually. So if it doesn't work out, then you have to pay the price. How simple is that? If there's something to destroy in today's market, it's not China's valuations. It's just the US valuations. You guys are the only one trading at the market top. So you think you're alone, you think your numbers are good, that your macroeconomical structure is solid. Let me tell you, it's just as fragile as it could be, because you're not alone. The world doesn't work like that. It is not US strong and the rest of the world poor and going down in recessions. It's not going to work. You guys are going to come with us if you put us down. So what Trump has been doing, meaning just putting everyone else's down, is just going to put him down as well. It's just don't know it. It's just think that it can be stronger than others, but that's not how it works. We're in a globalized world, so you're making your profits elsewhere any fucking way. So that's what's expected. The first day Trump started his goddamn trade war, it was stupid like that. But now we're gonna figure out the negative counterparts of this trade war for the U.S. I think. AUDNZD, we're still waiting for this one. I think we've been trading 38% Fibonacci retracement. Right in here, all right, 38% Fibonacci has been tested. We've done another bullish signal in here. It's another gray signal, so it's not that good of a signal, but I think for a range it's more than enough. I think we could have some bullishness in here before having a second burst of bearishness, kind of an ABC, usual standard correction. I think in this area is where I want to buy when we'll get to test of both the context and the 61% Fibonacci. I think this is where we'll have the timing to mature this range. For now, once again, only aggressive and experienced trader trying to catch up on this range. All others, you just wait for the range to be matured and you'll be trading either the speculative trade or the breakout and the accumulation and the breakout that may come after. So this week, have a look at dollar, have a look at yen. It's hard to figure out how this week is going to end because it all depends on how the fuck the news flow will impact prices, and that's complex stuff. Regarding Tesla, I don't hear any fucking thing regarding this pullback. I know some of you have been mailing me regarding their questions regarding whether we should keep on Tesla's trade on or not, if the trade was still valid, if the pullback wasn't a breakout invalidation or anything like that. I don't nearly even think it is. All I'm saying is that I'm safe. My stop losses are here. I don't nearly even think the trade can be reached out to there. We're in resistant context, so we clearly are far away from here. We're just at the breakout area. I think there is still way more bearishness to come on this asset. All other stocks are pretty, I don't know what to expect. So we're going to talk about them by tomorrow because we'll have much more precise stuff to share on those. Because as for now, I would like to have at least a daily candle close on the SPX and try to figure out what the fuck is at play with this unexpected reverse of the US-China deal. Even though to me it was absolutely fucking expectable, but still needed to be confirmed. Now it's here. We'll see how much we can take out of this. Regarding Xiaomi, and we're going to just close on this one. Xiaomi has been losing 10% over week because of a news flow. So it is not just falling because speculators are selling. It's just because we have a strong news flow. Just to set the story, it's basically that, in China, you've got two markets. You've got the Hong Kong exchange, which is kind of a safe island of investment money with its own currency, the Hong Kong dollar, and stuff like that. So it's an isolated island inside the big and gigantic Chinese territory. And aside from this, you've got the Chinese market. It's more likely controlled by the central government. But still, anyway, this is where we've got the most market, we've got the biggest investors capitalize, capital and things like that. So Xiaomi was requesting to get into the Chinese market as a security, and they were searching to do this for quite some time. And actually, I was hoping for this as well, because Chinese citizens really embrace Xiaomi. It's like the American Apple. I mean, Americans were just crazy about Apple. Now, just think about it and just transpose it to Chinese context. And in a Chinese context, Xiaomi is the big thing like Apple was back then. So they really like that, and I pretty damn expect that these guys will be ready to buy hard on Xiaomi if they were able to. which they are not. And the thing is that the Chinese central government has been turning down the request of Xiaomi security to be introduced into Chinese mainland market. So maybe I don't think it is a final decision. I think it's just a decision that just shifts the timing to later in time, and therefore that doesn't please investors and speculators like me. So some people have been asking for the money. Now what it may be expecting the prices trading lower, even though I don't really think that's a panic thing. So all I'm saying and all I'm doing regarding this thing is that I had some speculative entries in here. All I'm doing is I'm definitely putting a stop loss in here. If we have to go back to the support area, I don't want to be remaining in a bullish speculative trade as prices may be going down. But still, I think in this area between 61 and 76% fib, we could find some decent support. And if we do, I definitely want to be another buyer. As you can see, the context is in here, so I stand to believe that we could go there, pretty much close to a 76% fib. And if there is any buying entry signal in here, I'll take it as another speculative trade, which will help me averaging the first one, obviously. I'm not going to put shit ton of money, all right? I'm not going to increase significantly my exposition on this market. I'm just going to take another speculative trade only upon signals and with a defined stop loss, obviously, because if we had to break down, I'll get the fuck out. It's just to have better prices. It will bring my average speculative price up to this level, which I think is way more acceptable and way better. Because I think this is where the breakout may be occurring. All right, you can take this strong trend line in here. I think this is in this area that we're going to have accumulation. All right, so there accumulating and bam, bullish breakout, and we go straight to resistance area. Well, I'll do what? Take another layer of profits. Just that's how it goes. It can go wrong. I could take some losses, but if it does, the losses will be moderate. If it goes according to plan, gonna make shit ton of money. Simple as that. It's just risk management. I'm not magically forecasting the future. It's just this is where prices will go straight line whenever we'll make this breakout. We'll go instantly from there to there in just a few days. That's the price movement I want to catch. Right? Getting in there, securing the trade, partial profit taking, and then first target. Kind of just forecast this. All right, we go there, we accumulate, bam, bullish breakout, divergence, pullback, and end of trend. All right, sorry, I think I basically lost myself. So I think we're done here, but still there's a final thing I'd like to share with you. Some French users have been tweeted about that, but still. So it is a little something that to me is a big thing and a big game changer. CME, so the Chicago Mercantile Exchange, which is basically the biggest future places in the U.S., future trading, has been quietly moving ahead of releasing micro future contracts. So I was expecting to talk about that today because we were out of volatility, so I was basically, oh my god, we've got nothing to do, so at least we're going to talk about something, but unexpectedly we've got something to talk about. So I'll keep this buried for now. It's just we're going to talk about it. It's have massive implication on the stuff I may be offering to you in here with TradingView and with pro indicators and stuff like that, because I've been clear with that. I don't want you guys to get your hands onto scalping for many reasons, because most of you guys are very low capitalized. Most of you guys have less than 10K, which means it's absolutely not compatible with scalping for many reasons that I'll explain later, obviously. And the other problem is that many of you guys think the swing is too complex intraday. I don't get it. So scalping is the answer. Scalping is easy, and it's absolutely not. Once again, scalping is probably the most complex of those three between swing and intraday. But still, this is obviously also the easiest one to teach, which means in basically just 3 to 4 hours, I can teach you a very reliable scalping strategy. That doesn't mean you're going to master it, because most of scalping problems comes from psychology, and not everyone will be able to scalp. You definitely need to have some specific psychological behaviors to be a really long-term profitable scalper. And we're going to talk about this, and basically there's going to be a set of videos that will come up later, all right? As long as we'll have volatility and things to talk about regarding crypto and stock market, we'll definitely put the priority in there. But anytime the volatility may just dampen or whatever, we don't know if we have an unexpected low volatile summer, then if this happens, I'll do this. I'll take this time to be put it in motion, some videos about scalping. Probably 3 to 4 videos, 1 hour or 1 hour and a half long for each one, in which we're going to cover up the technicals. How do we build the context to trade intraday scalping using the indicators? What are the modulation? And I'll teach you how to read the order book and using the future markets to highlight flows, inflows, outflows of money. How does this work? Where are the interesting areas? Where are the supply, demands, all those shits. I'll tell you everything about the order book. Not everything, but everything you need to scalp properly. So technicals, fundamentals of inflows and outflows, so the order book. I'll tell you about how to read the order book, how to read the tape, how to read all those stuff in a separate video. So first one technical, second one fundamental, so the order book. Third one will be psychology. Obviously, we're going to have to talk about this because it really needs a specific psychology, and it's probably just less than 10 to 15% of users, or let's say 20% of users, who are going to be able to be trading, scalping, and 80% will just be unable to. All right, because it requires quite some time, fully dedicated attention. It requires a specific mindset, and it's not compatible with every psychologies. All right, all the aggressive traders, you can get the fuck out of here. It's not working. All right, I'm talking about the dominant psychologies. Every dominant person, you can just forget about scalping. It's not going to work out. All right, it's only work with a specific type of persons. All right, I'll describe everything in there. Obviously, I'll do this for free because once again, so some guys are making a shit ton of money selling coachings and whatever this is to make you believe that you're going to be a scalper. So I'm going to be honest with you, very few of you guys will end up being scalpers. So I'll do just like I always do. I'm going to give you pretty reliable and solid information, professional information, for free, just to fuck up the business of others who are making shit tons of money out of your backs. So that's how it's going to be, all right? Free set of tools and videos talking about scalping coming along the way whenever we'll have time to talk about that. So it is just set aside as long as we've got more important stuff to talk about, and we'll cover this up ASAP because, like I said, CME is going to give us micro contracts. It's going to give us the ability to scalp for guys who have less than 10K. All right. Back then, when we just had the E-minis, it was $25 per point for the SPX scalping. And the problem is, it doesn't work out if you have less than 25K account. So it was mostly closing up the door for most of you guys because most of you are low capitalized. So everyone who doesn't have 25K was unable to scalp. Because it was unable to future trade, means unable to have the futures order book, so unable to properly scalp. All right. Now you'll be able to, because with the new micro contracts, I think 5K accounts will be able to swing to future trade with decent risk management, not risking more than 1% per trade. So everything that needs to be done to properly, safely long-term scalp will now be possible for account sizes approximately 5 to 10K. So we'll definitely make videos about that. That's what I wanted to tell. All right, so it is no big deal, and it's not the final answer you were hoping to get. Once again, scalping will just work for 20% at best, and I'm very optimistic in here. It's probably even less than that. Anyway, I wish you guys a good day. See you tomorrow, probably for some intraday trades, depending on the daily close that we'll have today. So trade safe, remain speculative today, favor some bearish trades on any pullback that may show up, but still, if you see Wall Street buying the dip, then just don't fight it, all right? We need to see the candle close before actually putting a decision and introducing the bearish bias in this market. Just to put that in motion, this is what we have, all right? We've been breaking down the structure. If we ever gets to reintegrate this today, I'll be surprised because I see not a goddamn chance this to happen. But if it ever happens, and no. If you want to sell close to this line, all right? You draw this trend line. Anytime we get close to this line, we can reintegrate a bit, all right? But normally we shouldn't have a breakup candle reintegrating, all right? Like opening at the bottom, closing at the top, inside and above this trend line. That will be abnormal to me, and I don't really think it's going to happen. But this is the area of any pullback in Wall Street needs to be sold. Intraday only, you fastly secure the trade, you remain low leveraged, highly speculative, and if it goes not according to the plan, you don't fight it, all right? Let's be honest, we could have another freaking buy the dip situation, even though I don't nearly even think it's possible. Don't be too aggressive.